And while the other asset classes, namely equities and rupee, were declining, the precious metal space, especially in India, has been gaining quite strongly there. On your screens, the Indian gold prices are up more than 1%, and this is coming in even as the international prices are trading very flat off their highs that we saw in the Asian markets today. It's the 7-month highs coming in for the gold prices. There is premium in the spot markets, and it is because of the rupee depreciation by 2.5% as well, which has taken the gold calculations on the higher side. Should get silver back on your screens as well, because we are trading at 51,000 on to that one as well. Silver, of course, has outperformed the precious metal space. You have seen 15% of gains coming in for silver in the previous week, and this week, yet again, today has started on a very strong note for the market. So 1.5% of a gain for that one as well. The Brent crude prices in the meanwhile have been holding steady at $110 per barrel. The previous week was the biggest weekly percentage gain since the first half of July. There is unrest in Egypt, which is driving the prices on the higher side. The Brent crude prices have gained more than the NYMEX on your screens there. Let's get in then. We also are now joined by, Vandana Hari, who is editorial director, Asia Platts, and Azleen Ahmed, editor, crude oil markets, Argus Media as well, to get their views in case of the crude prices there. Azleen, to you first, and the Brent is targeting, or rather trading at 4-month highs as Egypt issues resurface. How serious a threat is it on supplies coming in from the Suez Canal?
Well, the Suez Canal is definitely a vital transit route for tankers going from Middle East Gulf and Indian Ocean to the Mediterranean, and roughly 4.5 million barrels per day of oil is carried through the canal. So if the canal is shut, shipping times for cargoes going to US and Europe are expected to increase about 10 to 14 days. So this adds to cost and obviously to oil prices, which is why the market is very concerned. But right now, the canal seems open, and it's unlikely that there will be disruptions because it's quite important to Egypt in terms of economy and revenues. But as the violence escalates, the market is really watching the situation and is very cautious about what's happening with the canal.
Azleen, also the Egypt issues led to prices gaining by 8.5% for the month of July, and the previous week as well saw the prices gain up by nearly 4% on issues regarding Egypt. Where do you see the prices now headed?
Well, prices did go up because the violence in Egypt raised concerns about possible disruptions to shipping in the Suez Canal. But prices also went up because of crude export disruptions from Libya, because there were protests that prevented loadings at tankers at several terminals in Libya. So all that combined with signs of some improvement in the US economy and also a patchy recovery in the Eurozone, I think will keep prices well supported, and we could see Brent well above 110 in the fourth quarter if it's indications of a cold Northern Hemisphere winter.
Fair point, Azleen. Vandana, coming to you as well, what do you see as the latest string of economic data from US, China, Europe? All have been on the positive side. We have seen the developed world actually come out with very strong economic number. Does that tell you that the crude oil demand from here is expected to strengthen?
We have indeed seen some positive data in recent weeks, especially from the US and China, which has been one of the factors in the recent strength that we've seen in crude prices as well. However, I would be cautious in linking those figures, or positive figures especially, with a sustained increase in crude demand. As we have seen time and again, what markets have been doing is that they react very positively to the smallest bit of good headline news. And for all you know, the next month, another set of data gives reason for pessimism to the market. So connecting the recent good economic data with let's say higher consumption of oil, there's a lot of dots in between, which I'm not sure the market is connecting right now, which is another reason I would say that if you see an uptick in crude prices as a result of good news, good economic news, you might equally see them going down very quickly as well when the news is not so good.
Fair point. So there is still uncertainty coming in case of the crude prices. Azleen and Vandana, thank you so much for chatting with us in sense of the energy markets there. Let's also then get in Chirag Sheth. He's VP Ratan Manharlal Commodities and he joins us live on the show as well. Chirag, hi, welcome. What's your sense really coming in for the energy space now? Because while the crude prices have been steady, they have been gaining for the last couple of months, there has been a rebound which has come back for natural gas as well.
Yeah, I think what is really happening in India, especially given on the back of the rupee depreciation, we've seen some sort of outperformance coming into the MCX space. If I look at purely from a fundamental perspective, I think the prices are now getting to levels which I would call a stretch. Sorry, in that sense. And I would be short into crude oil at this moment, somewhere around 67.50, 67.75. I believe that it's a fantastic opportunity for somebody who wants to take the risk on the table and go ahead and short crude oil. I believe that fundamentals are not justifying the $108 mark on WTI at this moment, And as you rightly mentioned, that data is just 1 month positive. I think we'll have to wait for significant amount of improvement, both from the US as well as in Europe, to see that whether it translates into demand numbers or not. So at this moment, if I look at purely fundamentals perspective, I'll be short into crude oil.
Vijay, how would you look at the natural gas prices? Because we seem to be holding back above that 210 mark.
Manisha, we are now heading into the upper end of the band that I have been advocating for so many weeks now. Currently at 218, I think if it gets to 222 odd levels, high risk traders I'm guessing here, would want to short natural gas, which I think would be a fairly justified thing to do. If you were to short natural gas at 222, assuming you'd get that price, I think your target on the downside again would be 215 to 217 odd levels. So another spike up, and I think you should be shorting natural gas.
The big story really, but though, is in case of the precious metal space, where the gold and silver prices have continued to run much on the higher side. Chirag, how are you looking at the gold and silver prices? Would you say it's perhaps the play of rupee, or is it because of the government putting so many curbs?
I think it's both. If you look at both rupee as well as government putting curbs, I think what has happened is that the rupee depreciation has already helped gold prices to move up. Another problem is that we are now going to enter into the traditional demand buying season. So obviously, because the curves that has been created by the government, what has happened is there is some sort of physical shortage, which is, which what a lot of people are anticipating, that has led to the premiums move up, and thus gold prices moving up. If you ask me whether fundamentals have changed overnight over the last 10 to 15 days, maybe not. Fundamentals still remain fairly negative when I look at, from an overall market perspective. Maybe from an imminent 1 or 2 week perspective, I think, trading on the longs would make you money. But from an overall perspective, I would not be a buyer into gold or silver for that matter. But from a 1 week's perspective, yes, we could see further 200 to 300 rupees kind of upside on gold, or maybe another, 500 to 700 rupees kind of upside on silver. So yes, maybe from a short term, one should buy. But from a medium term perspective, maybe 1 or 2 months time, I would see downside in both gold and silver.
Fair point. Vijay, we have been discussing this as well, and perhaps the kind of run-up that we have seen on the charts, this is looking overbought right now.
Manisha, where bullion is concerned, I would still remain positively biased towards silver in relative terms as compared to gold. There is an overhang of supply from central banks in gold, which is not so much likely in silver. But having said that, I also remarked on Friday that the kind of rally that we've seen in silver is something which has basically gone a little too far in terms of exuberance. Probably, and I'm guessing here, is because shorts have got squeezed fairly mercilessly. So I would doubt if silver would be able to sustain above 52,250 or 52,500 levels. That's where I expect selling to come in. But having said that, I think delivery-based buyers should be looking out for buy opportunities in the physical segment if the price was to go below 48,500 again. So that's the kind of range. For a trader, it would look like a killing kind of a range. But the kind of volatility that we are seeing, I think it's not really unachievable.
Fair point. But even as the rupee had depreciated so much in the markets today, Chirag, we didn't see much of an exuberance or that calculation really seeping in case of the base metal prices.
Yeah, I think base metals, one is looking at very diverse movement. We have to be very selective in base metals. Some of the fundamentals still look good. I think there is a space in base metals where on nickel or copper, things have looked a little bit stretched. I think 465 on copper is way out of, what fundamental justify, for that matter, 935 nickel, So we would be short into copper and nickel, and we believe that both these are ripe for a significant amount of correction, I won't be surprised if I would see a 3 to 4% kind of down move in both both copper and nickel at this moment. But I would be still buyer into something like an aluminum for that matter, or for that matter zinc. I believe that there is still 1 or 2% upside in both these commodities, because fundamentally still a little bit, tightened in aluminum because of those financing deals that we've seen. We believe that aluminum prices could move towards 121 in the medium term.
Chirag, just one sense before we let you go. How would you look at the kind of moves that we have seen in most of these commodities? Would you give it to rupee? Wednesday again would be important because you have the Fed meeting minutes coming out. So ahead of that, what kind of moves are you expecting?
I think Fed has got it pretty clear that the tapering is likely to happen, and tapering is likely to happen most probably by the year end, So there is no, in that sense, there is no ambiguity on that sense, something that was there about 1 month ago. I think that is likely to suck out liquidity from the market, and that will create some sort of pressure in most of these commodities going forward in Q4, I think on MCs what we've seen is significantly because of rupee depreciation and some of the short squeeze that we've seen in some of these commodities, and 1 or 2 positive numbers coming from China or for Europe, that has helped most of these commodity prices to go up. But I believe that liquidity is the big driving force, and when liquidity starts tapering off, we could see significantly downside in some of these commodities.
Well, let's take a look at the commodity prices as well. And today has been a strong day, especially for the edible oil space, where you have the soybean prices trading at a 5-week highs, perhaps because of the rupee depreciation, as well as we import much of our edible oils there. Vijay, how would you look at the soybean prices? Nearly 3% of a gain coming in for that one, more than that actually.
Manisha, it's got more to do with the rupee rather than anything else, because I'm seeing crude palm oil prices also in the prompt month series hitting almost 2% on the upside. Since we tend to import our edible oils, I think the markets have gone ahead and basically priced in the speculative premium into the prices. If and when the rupee is to stabilize or even strengthen against the dollars, I think this kind of strength will get reversed, because there doesn't seem to be too much by way of exuberance in the fundamental story here. So it's more of a currency play and speculators building into the froth and the speculative premium.
Vijay, 1% up nearly in wheat and sugar as well. The chana prices in the meanwhile have seen a bit of a profit taking coming in. Which one would you want to pick up for the trade tomorrow?
I think, Manisha, chana, as we talked about, would suffer some kind of bull unwinding close to 3,000 levels in the September future series, and I'm seeing a high of 2,960 from where it's declined. I think it's heading into a small short-term top out there. So should it get to 2,960 or 980 odd levels, I think it would present a short opportunity, although it does seem a little far-fetched at this point in time because the price is closed at 2,909. Where sugar and wheat are concerned, I think wheat is likely to see a creepy, crawly, very calibrated upthrust, because the prices might just inch higher from here. But it's not something that a day trader is likely to make too much money out of. Ditto with sugar, because sugar futures also tend to be a little illiquid, and the impact costs are high because the market lacks depth. So although you might see some gains coming in on your computer trading terminal screen, I think in terms of execution of a trade, it would be very difficult to capitalize on these price moves.